Dr. Emily Roberts of Personal Finance for PhDs here. I am with Sam Hogan, a mortgage originator specializing in early career PhDs. And Sam's here to tell us about a really exciting grant that's being offered through the bank that he works for. So, Sam, would you just introduce yourself a little bit and then tell us more about this grant?
Yes, so Sam Hogan, I'm a nationwide loan originator and I work with Truist. The grant is provided by Truist. Depending on your area, it could be $7,500 or $10,000. So the funds come from Truist. They're not from an outside source. This is a non-repayable grant, so it's not calculated into the debt to income ratio, and it's truly a incentive for lower income home buyers to, you know, help them get across the finish line when they're buying a home.
Okay, so this is really actually free money for the people who qualify.
Free money if you make under 80% of the area median income, which is something we can look up, and I will provide the website for that. Um, PhD stipends and a postdoc stipend or even a fellowship is usually at 50 or 60% of the area median income. So in my almost 6 years of helping PhDs and postdocs, no salary, no PhD salary is over this threshold. So we're
Mhm.
very confident that almost every PhD or postdoc would qualify with their income level. We just want to match that income level up with the area they're trying to buy in.
hmm And kind of one more question about the grant. You mentioned dollar amount limits. Um, how can that money be used? Like, can it be used toward anything in the home buying process, or is it just like straight up cash that they get, or how does it work?
So the money can be used for down payment or closing costs. Um, it is a 3% up to $7,500 or 5% up to $10,000, whichever is less. So your ideal scenario is, you're purchasing, for example, let's say 300,000, and you can use the majority of the grant for your 3% down payment, right? So your minimum down payment at 300,000 is going to be $9,000. 7,500 of that can be covered by the grant. Um, in the Metro DC area and the metro area outside of Atlanta, this increases to 10,000 or 5%. So you have to be in one of the designated counties, which we can provide that information also. But just from my experience of seeing a lot of different stipends across the country, everyone is going to qualify because they're going to be under this income threshold,
Mhm.
which is
Well,
huge.
no, this is really exciting because I mean, a really common scenario that you run into, I'm sure, is people are able to buy a home in terms of like their ongoing income, but because they're early in their career, they don't have that savings built up yet. So helping out with either the down payment or the closing costs or whatever is like overcoming a massive hurdle for these home buyers.
Yeah, and I want to just add in also with other types of down payment assistance, they that assistance can be repayable in a second loan. They also calculate that extra payment into the debt to income ratio, which can limit your buying power. This $7,500 grant, because it's non-repayable, it's not calculated into the debt to income at all. Um, a very common scenario for a PhD or postdoc buyer is that we're approving that new homeowner at the maximum they can qualify for. So their debt to income doesn't have that cushion or wiggle room on the higher end to allow for some down payment assistance. So that's why we're trying to get this information out to some PhDs who might be wanting to buy because that, I mean, $7,500 is a huge portion of your down payment if you're putting minimum down. And never before have we had the opportunity to still qualify at those higher debt to income ratios. So it's really, really cool. And there's no requirement to live in the home for X amount of years afterwards. It's truly a no strings attached grant.
Wow. Okay. Incredible. Okay. So let's help people figure out whether or not they can qualify for this. So there's two qualifying portions. One is the area where you're buying the home, and the other is your income. So let's start with the geographical one first. So narrow down as best you can, and then maybe people can also look this up. But where is this grant being
Mhm.
offered?
So I can say it's going to be mostly your mid-Atlantic states, and some of your states in the in the southern portion. So Georgia, Florida, North Carolina, um, Virginia, Pennsylvania, even some areas of Tennessee and Kentucky. Generally speaking, it's not offered in the Midwest and it's not offered on the West Coast. Um, and it is by county. So when I was reviewing the list, almost all of North Carolina is applicable, almost all of Georgia, even about half of Florida, it's applicable. And they do this because they're trying to add an incentive to some of these underserviced areas for them to buy real estate. Um, but if you're in, the Research Triangle in North Carolina, or even in Mecklenburg County, which is closer to Charlotte, all these areas are going to be applicable for the grant. So, generally speaking, if you're at any tier one research university on the East Coast below Pennsylvania, there's a good opportunity that you're going to be able to receive this grant.
So is this something that people can look up? Like, is it open on the web, or do they need to like contact you and check the area that they're buying in?
You are able to look up your income limits for your area, but you do want to check with me for the specific county that you're looking to purchase in. It is county by county, um, but like I said before, sometimes the majority of the state it is allowable. Some areas it wouldn't be allowable are, like the Northeast is off limits. And I'm not sure if this is because Truist is headquartered in North Carolina, but a lot of these southern mid-Atlantic states is where the grant is available.
Okay. So they'll need to check with you for the county, whether the county they're buying in is eligible. And then how can they look up like the median income and make sure that they're below? I know you said that pretty much if you're on a grad student stipend or even a postdoc salary, you're gonna be below 80% of the median income, most likely. But if people just want to double check, or if they're buying with someone who has a higher income or whatever, how can they look up these numbers and compare their income to those levels?
Yeah, if you just Google Freddie Mac income lookup tool, it will populate a map where you can punch in an address and see what the area's median income is for that county. Um, if you are borrowing with a co-borrower, it does increase the income amount. So where one borrower, you know, I know in North Carolina in Wake County that you have to make under $88,000 for one borrower. But for two borrowers on the application, that might jump up to 140 or so. So it is case by case, but definitely something first-time home buyers should look into to take advantage of because the grant beats out all other down payment assistance options because of the debt to income, what it allows, and there's no repayment.
Yeah, it sounds incredible. Okay, so last question is if people are in buying in an eligible county, if they have the eligible income, what's the next step? Like, how do they apply for this grant?
Yeah, I would call or text me. You also can email me at sam.hogan@truist.com. But we want to do our due diligence up front so we can reserve the funds with Truist and then, head to closing with saving a little bit more money than you expected.
Awesome. And what's your phone number for calling or texting?
Yes, it's 540-478-5803.
Okay, incredible. Anything else that people should know about this?
The funds do get renewed. So if Truist thinks that the pool of assets is getting low, they will renew for the next calendar year, basically. So I wouldn't wait to the last minute or um, get too far ahead of yourself. You want to make sure that you're in an allowable county, you're under the income, and then as soon as you get into a purchase contract, that is when we can reserve the 7,500 or the $10,000 for you.
Got it. Well, thank you,
Yeah, of
Sam, so much for sharing this information with the audience.
course.